All right, amazing. Well, I am pleased today to be joined by Joe Zuck. He is an operating partner at Altamont Capital Partners, where he leads insurance and insurance services investments across a portfolio that includes Accelerant, Embark General, Kuvare. I've been fortunate to have Joe on the podcast a couple times previously and recently hosted him for a fireside chat for the InsurTech Association, which was great. And so looking forward to digging in a little deeper today. So welcome, Joe.
Thanks, Josh. Pleasure to be here this afternoon.
Great. So anything you'd just like to add on sort of background beyond what I
Sure.
opened up?
Yeah. Happy to give. So, 23 years in the business, last 6 years as an operating partner with Altamont Capital Partners. Started my career 10 years as a reinsurance broker and underwriter. Spent about 8 years with two MGAs leading corporate development strategy, as well as building out P&C insurance verticals.
That's great. So, I'd love to, obviously, everyone would love to hear your thoughts on the industry, where it's been, where it is, where it's going. But just before that, is there a particular, like from a career point of view, is there a particular through line that you would say connects these career moves you've made?
Yeah, no, I think one of the best through lines that has permeated my career has been ongoing curiosity about the business and watching the business evolve from, where I thought was a great foundational education in the business through the reinsurance lens as both a broker and underwriter to moving to the primary insurance side, where I often like to say I got an MBA in how the business is actually adjudicated, and then moving to the operating partner role with Altamont, where I get one foot alongside our investing principals and the other foot alongside our executives and senior management, building our businesses and our portfolio companies and what is a ever-growing ecosystem of insurance here at Altamont.
Got it. And so is there anything, I mean, obviously, across all industries, across all markets, PE has become a massive player in how businesses are capitalized. Is there anything, particularly unique about PE and insurance? Anything particularly unique about being an operating partner in PE and insurance versus, maybe some other industries?
It's a really good question. So, operating partners aren't anything new per se, but I think, many PE firms are starting to utilize and see the value that operating partners bring to not only the funds, but the underlying portfolio company businesses as well. One thing that I think we do really well is help accelerate the business growth and the value creation. I often like to say we operate as a Rosetta Stone, especially with insurance, where it's so unique and so complex, but also very different than other financial services. And then thirdly, it's the institutional knowledge that myself and others bring, as well as the on-the-ground expertise in terms of the operational piece of it, and being able to synthesize that quickly for the investing principles at the PE firm is really where the operating partner can create a lot of value. And then, of course, the networking and the relationships and the human capital side of it in conjunction with folks like yourself and just deep networks that can help accelerate the growth of these portfolio companies in insurance. And insurance being such a human capital intensive business, that's a really differentiator, and it's been a differentiator for us.
Yeah, I started my career in investment banking, and it was, the insurance guys and the banking guys were locked away on another floor with the different balance sheets and P&Ls and everything than everybody else was dealing with. So as I've kind of gotten more exposed to the industry over the last decade or so, it's definitely been interesting to, see just how complex and unique it is. But in terms of your tenure, just digging in a little bit more on the PE side and Altamont, was there a particular investment thesis investment theses that the firm was focused on when you joined, and how have they evolved, and to the extent you can share, what things might you be focused on or see coming on the
Certainly.
horizon?
Well, I won't get into too specific in terms of any, proprietary, but I will speak in kind of generalities and thematically. I was fortunate to get to know my colleague and managing director here, Sam Gaynor, who co-leads the financial services vertical, frankly, through a cold call in 2015. Met him at Target Markets and pitched him some ideas, and we stayed in touch over the years. And then there was a fortunate opportunity I had when he reached out in 2019 to say, hey, we really want to continue to build out our insurance practice as part of the financial services vertical, and would love for you to join as an operating partner. Altamont had just made the investment in Accelerant and had Kuvare and Embark. And we had a shared vision of really looking at an insurance, what we call ecosystem here, of separate portfolio companies that very much play along the insurance vertical. And that's more or less what we've manifested here today, including some undisclosed portfolio companies or investments we've made that tap into the various points of the vertical. We see insurance as a huge market with revenues that translate to premiums, right, that are very sizable. A business that does have definable moats, both from a regulatory and rating agency standpoint, and a business that continues to power finance and lending, and frankly is always in the news, right, is the natural regulatory thing, and also plays a vital role in trade and commerce and even recent world events. So for me, that makes it very interesting, but also very quite investable for Altamont as well.
Yeah. And so I think you've done, and correct me if I'm wrong, close to 20 acquisitions in your time. And I'm curious, is kind of the way you evaluate a target changed over the course of those acquisitions? Is there anything particular, again, without giving anything proprietary away, is there anything particular you look at that maybe other buyers might overlook, particularly if they're not, ones who have a history in the industry?
Yeah, I would say certainly. I mean, Altamont's made multiple acquisitions, both in insurance and financial services, as well as through the portfolio companies and investments, and in other verticals as well. I think one of the things that we have seen is repeatedly from potential targets and or management teams, even if they're adding on to existing portfolio companies, is the depth of understanding of insurance and actually the nuance of insurance and how the business actually operates and work is really important for the seller, and building that credibility with management team, not just coming in and saying, hey, let's just strictly look at the numbers and the financials, but really understanding how the business operates, how it grows, the challenges that particular business may face in whatever segment of the industry vertical it's operating in, as well as the technology and the people angle of it, Josh. That is really where we shine, perhaps more so than other private equity sponsors in the space, and what has set us apart. I think from the seller side, what we've seen is more sophistication, certainly far more knowledge and awareness of private equity, both good and bad, from a seller standpoint. And so the cultural aspect remains really important for many of the sellers, but also they have a lot more understanding of where market multiples are, good advice from investment bankers, as well as what it means to them in terms of what can the private equity sponsor bring to help them grow their business and achieve their future objectives, perhaps under PE sponsorship.
Yeah, that's interesting. So one of the areas where I think you've had some public thought leadership is around something I think you call the insurance stack compression
Oh,
thesis.
compression of the insurance stack. Yes,
Uh,
the compression of the insurance stack. One of my favorite topics, actually, and this actually manifested itself more vividly for me, Josh. Last fall, I was at CIB with one of our portfolio companies, Accelerant, and spending time with the management team there, and was fortunate enough to meet with many of the companies in attendance, both retail brokers, wholesalers, insurers and reinsurers, and the C-level leadership. And what became very apparent was the increasing desire of what I call risk capital, whether that's ILS or reinsurers or insurers, wanting to continue to get closer and closer to the upfront origination. And I think the interesting thing about AI here and technology is it's further facilitating that at a faster pace, bringing greater data fidelity and risk transparency, but also cutting out some of the frictional cost, meaning that I think fewer of the intermediaries along the chain and the response, or maybe sometimes lack of responsiveness along that chain, gets cut out through AI, and the real, knowledge workers in the future, I think, of human capital in the insurance chain is really freed up to think about closing the coverage gap and other interesting angles and creativity that it would bring to the industry. And so that's what I meant by the compression of the insurance stack in that article.
yeah. So, I mean, does that mean wholesalers, MGAs, program administrators? I mean, should they be nervous?
Yeah, well, I think they're what they evolve a little bit, right? And I think I don't think they should be nervous, but I do think we've already seen to a degree the lines blurred as well, right? You see now wholesalers owning MGAs. You see MGAs having their own sidecar facilities or captive reinsurers or insurers. And then you're seeing increasingly more asset managers and ILS funds want to go directly to the point of origination and use fronts or hybrid funds as just the regulated statutory entity, sometimes directly as well. I still think that you do need intermediaries such as reinsurance brokers and all who bring or bankers who bring the skill sets of how to pull these transactions together. But it is definitely the traditional way of insured retail broker, wholesale broker, MGA market, insurer, reinsure, retrocessionaire certainly
Yeah.
seems to be coming far closer together, and all the brokers in between than it once was. And then certainly on the insurance side, you're seeing just larger insurers and reinsurers have their own ILS arms, their own reinsurance arms. Maybe they're investing in the MGA themselves. So you're definitely, that's what I mean by the compression of the insurance stack.
Yep. Yep. So I'm curious, you mentioned the coverage gap a moment ago and the use of AI. Were you talking about the use of AI in the sense of automation and process efficiency and therefore freeing up time for thought leadership, or were you talking about sort of AI in the sense of we're using AI to decode the genome and then be able to find solutions? Is it possible
Well,
to
I always like the joke
for AI,
good analogy.
finding the coverage gaps?
Certainly, very good analogy. Well, once AI builds a policy admin system, I'll worry for the many lines of insurance. But until then, I think we still have some time. But what I meant by that was very much around the risk transparency piece of it, the efficiency. So I really see AI and LLMs as an augmenter here to start, and very much cutting the expense side of the equation or the inefficiencies. A lot of the rote tasks that people are spending their time on can go away, whether it be bordereau or ingestion, and be able to think about or handle more of the exception reporting and the more creative or dynamic elements of our business. I do think down the road, though, you raise a really interesting point, is can AI start to spot coverage gaps and start to spot inconsistencies, right? And can they start to utilize AI to develop new lines of coverage or wrappers, for lack of a better word, this afternoon of insurance? I think that's where it's going to get very interesting as well.
Just slightly kind of not curveball, but just a little different track one-off question. Any thoughts on, assets on chain being used as an alternative to reinsurance? And, is that a real threat, or is that a niche threat?
It's a good question. Yeah. So the tokenization and the assets on chain, I know it's been talked about for many years, right? And I think it's kind of ebbed and flowed with the popularity of digital assets and crypto and Bitcoin specifically, and maybe even with the price of the digital assets and where they're trading. I do think that's something that in theory could be considered, but as long as we trade in fiat currency, I do think that is probably more of a scholarly endeavor versus something that's a really pragmatic solution for most companies at this point in time.
Got it. So I'm curious, just staying on the AI theme. Are you able to share, because you do have a variety of different portfolio companies, kind of maybe a couple of use cases and how they're applied? Again, I don't want you to give away anything proprietary, but how it might be,
Sure.
Different in one organization versus another.
Yeah, so I mean, I'll speak to some of our live underwriting, balance sheet businesses. They're using AI in some really fun use cases, including underwriting referrals, right, for delegated underwriting authorities. So, how quickly can we process the information of an underwriting referral and tee that up to our underwriters and go back to the MGU in instances? That's getting better and better, where we're getting to a point where AI is somewhat starting to approve the simpler cases here of referrals from the MGUs back to the carriers. Ingestion is another element where AI is going back and requesting missing columns or rows or inconsistencies in bordereau reporting here for premium exposure and experience information. In another, more on the insurance services side, we're seeing AI being able to kind of play a little bit of a big brother, right, in terms of follow-ups and what a team is doing and spending their time, but also calling out to if a particular client owes a document back to us or vice versa. Being able to track that very efficiently has been a great use case of AI. And then more on the loss side of things, we've seen AI be able to identify sentiment and tone in claims runs and adjuster notes as well, which has been pretty exciting as well. So still very early use cases, but the speed of which the team is using AI and starting to experiment and create their own bots and tools, I would say just 3 months into the year is moving exponentially quickly.
You've mentioned a couple times already on the importance of human capital, and again, you've put a lot of thought leadership out on that front as well. Are you seeing any? Again, I guess we're sticking with the AI theme, but are you seeing the impact of AI on human capital strategy? And if so, is it at certain levels of organizations? Do you think it has potential impact on kind of what the future C-suite looks like?
Yeah, no, I mean, and it's a really good question, right? As to how much does AI impact the upper echelon of white collar versus more entry level roles and positions. You could see a world in which AI does maybe streamline that a little bit, right? And but on the counter side to it, does it free up time for your executives to spend more creatively in terms of building their business, and being able to think about things that they weren't able to spend time on. And so I still think probably the jury is out. I certainly can't tell yet. I do feel that I am busier than ever, though, with AI, because the pace of which AI can respond back to you with answers or summarization, it seems everybody is working even harder, but certainly more efficiently than before.
Yeah. And have you changed the way you look at talent or think about talent over the course of your time at Altamont?
That's a really good question as well. Thinking back over the last 6 years, I would say that we have been more open to. Firstly, we always look to find really talented insurance professionals or financial services professionals. And we like to say, we try to focus on hiring a team of experts. But the reality is also we bring in a lot of early stage career folks as well. On the earlier stage side, we have been more open and changing our views over the last 6 years, or at least I certainly have, to look outside of our industry or at adjacents where we can teach them maybe the insurance or the financial services elements of that particular business or portfolio relatively quickly. And again, they can be augmented, but do they have really good skills in terms of tech or willingness to think laterally in different ways? That's been a really game changer. So we've been able to get some really bright, talented people from all types of different industries into insurance and financial services. And maybe they were never going to look at it before. And then once they're in, they actually love it because they understand how fascinatingly complex the business is.
So independent of whether they come from the industry or from outside the industry, do you look at the first 3 to 5 hires in an early stage company differently now than say 5 years ago?
Oh, wow. I think the one thing we would say around that is their openness and willingness and to technology and their adoption and aggressiveness to understanding that, hey, AI, LLMs, tech, it is here. It's not going away. It is the future. Where maybe 5 or 6 years ago wasn't as much of an important topic. Yes, it was about digitization, right, and technology. Today, I think if we come across a management team at a future portfolio company or a future investment, and they're very closed-minded about that, I think that would be something very challenging for us to consider, and certainly for myself to consider.
Yeah. So I think it's the insurtech wave crest, and now the dip, and it seems like we're kind of maybe entering a new phase here of some interesting opportunities. But I think some would say that first wave was evidence of maybe VC not always being the best fit for in certain insurtechs. And for those who maybe aren't as familiar with the nuances of PE versus VC, would you say PE is generally a better fit for the insurance industry, or is it more about sort of the investor, regardless of whether it's VC, PE, whatever the case may be, understanding the nuances of the industry?
Good question again. For me, I think it's, and what I've educated founders on, or when I've been asked by founders on, is it's very much, Josh, the understanding of the investor, of what they're investing in, and the industry itself, whether that's VC or PE. Clearly, VC are earlier stage investors looking for a VC outcome, where private equity tends to invest in later stage. That being said, at Altamont, we've always been a bit of a hybrid, where we've done de novo startups from startup to scale up, and applied meaningful amounts of equity. Accelerant is a great example of that,
Yep.
or Kuvare is another great example of that in life and annuity. However, at the end of the day, if the investor truly doesn't understand both at the boardroom level as well as a good enough understanding of the operational level of insurance, I think it's going to be very challenging for that founder and the team to be successful over time.
Well, Joe, this has been great. Any other kind of just thoughts on the state of the industry or anything else you'd like to share before we wrap up?
Yeah. Thank you. Well, first off, thank you for the time this afternoon, Josh. I would say generally the industry remains really dynamic. I think we're at a great crossroads of really seeing the manifestation of AI and tech and LLMs bring that risk transparency and bring that efficiency of capital closer to risk origination. I'm particularly excited about what that means in terms of new products for the insurance industry, new risk transfer mechanisms, closing the coverage gap. And, lastly, I'd say that, despite we're in a soft market here, is probably no better time to be growing and building in the insurance industry than now. So I'd encourage listeners to continue to be curious in the insurance industry and continue to build.
All right, great. Well, Joe, appreciate your insights and your positive energy toward the industry. And thanks so much for joining me on the InsurTech Leadership Podcast.
Thanks, Josh. Have a great